Happy New Year, everyone, and welcome to our Hordes Dairyman monthly webinar series. My name is Abby Bauer, and I'm an editor for Hordes Dairyman magazine. Thank you for joining us today for this webinar titled The Dairy Situation and Outlook for 2024. Our presenter is Leonard Polzin, the Dairy Markets and Policy Outreach Specialist at the University of Wisconsin-Madison. A new year often brings excitement as well as some trepidation as we wonder what the milk price and dairy demand will do over the next 12 months. Leonard will lead us through some of the factors that will influence dairy prices in 2024 and share his predictions for the year ahead. This January kicks off the 14th year of our monthly webinar series, and we are thankful for our dedicated listeners who have tuned in to programs over that time. All of our past webinars are archived on our website, and you can find those at hordes.com. Feel free to check out that webinar tab if you want to watch any of our previous webinars. Our sponsor for this month's program is QLF, Quality Liquid Feeds. We thank them for supporting our program. If you're listening to the presentation live, you have access to a PDF copy of the handouts. You can find that in the handout section of the GoToWebinar control panel. Just click on the handouts arrow, click that down, and you can click on that PDF link to print out a copy of the handouts. Also, if you have any questions for our speaker, please type those into the questions section of the control panel, and we will answer those following the presentation. Now, it is my honor to introduce you to today's presenter. Leonard Polzin grew up on a Wisconsin dairy farm and received a bachelor's degree in dairy science and agricultural business from the University of Wisconsin-River Falls. He later went on to complete his graduate work in agricultural, food, and resource economics from Michigan State University. He has extensive experience as an educator, farmer, and analyst. His work focuses on dairy markets, firm-level economics, risk management, and trade and policy. Leonard, thank you for joining us, and I look forward to hearing your thoughts on milk prices, dairy markets, and more for 2024.
Well, thank you very much for that introduction. It's great to be here today. I really appreciate the invite, and thank you for so many people joining in today and sharing part of their time with us. I hope to provide some good information that'll provide kind of insights on where we're at, where we're coming from, and maybe where we're headed. So I think during your introduction, I thought that was very appropriate when you discussed 2024 and where maybe some of the demand for dairy will be. I think that's going to be a very interesting kind of backdrop and portion of what the year looks like. I think that's really going to paint the picture, if you will, for 2024 is that demand side. So even with that being said, I think it's still important to start with supply. And of course, our supply starts with the dairy cow itself, right? So, you know, as I go around and talk to folks and I'm in front of a group, I'll often ask for a show of hands of, you know, who thinks 2022 was a good year and who thinks 2022 was maybe a bad year for dairy farms. And usually the consensus is that 2022 was usually a pretty good year, right, on the farm level as far as profitability goes. And then I'll ask the same question of 2023. And often we'll get just the opposite response. So I think it's important to kind of take a look at where cow numbers were in 2022 and where cow numbers have been trending so far in 2023, kind of as we look towards what might be happening in 2024. So 2022, we really had this, you know, kind of oscillation, almost flat level of cow numbers throughout the majority of the year. And then as we got towards the end of the year, towards the first part of 2023, we kind of saw that supply response from some of these higher prices in cow numbers. And then once we hit that peak, we just kind of started trickling lower and lower and lower, and that trend has continued. So as we take a look at this same information, but kind of looking at it year over year, you can see that, you know, our cow numbers aren't outside of any, you know, historical range, right? But, you know, we definitely are starting to have that very significant trend in lowering cow numbers through this year. I'd say at the moment, I think our November numbers are probably likely to continue this trend. And as we go into December and we get closer to the spring, I think it'll be very interesting to see where some of those numbers come, especially as we take a look at milk production. So normally we start to see, our spring flush happening in the next few months here, and milk production increasing. So in the numbers for December, right? And then as we get to January, February, we come down, and then we're, back into that spring flush, like I was just saying, in that March, April, May time period. So when we take a look at milk per cow, all things considered, we have been milking well. We did see a slight drop off from 2022 in this, July, August time period, but all things considered, I'd say our dairy herd is milking quite well and on track to slightly above in some months of where we were last year. So, with that, I'd say our, total US milk production here would more or less reflect that, right? So as our cow numbers have come down, you can see that 2023, we have had less total milk production in a number of months than we did last year, but still above where we were a few years ago. But I think those prices are definitely coming through to that farm gate, and the market is signaling that, hey, we are long on milk, and there, we need to have the market clear enough product in order to keep some of these higher production levels up. So we are seeing the producer response on that side too. Earlier this summer, I got asked the questions all the time about livestock slaughter, right? So that often made headlines as we kind of looked at some, higher rates of animals going to cull than what maybe we'd seen before. But as we get to the later quarter of 2023 here, we can see that some of those numbers have come down a bit, and it'll be very interesting to see where December comes in, because we kind of do see a trend as we get towards the end of the year of having a slight uptick for the last few years. So it'll be very interesting to see where December comes in on those final numbers for dairy cow slaughter versus where we've been, kind of dropping off a little bit here. I think part of that is that, as dairy producers look at their herd and they look at the profitability of individual animals, I think they've made a lot of those culling decisions early on already, especially as that milk price had dropped this summer, and kind of really evaluating which animals they were going to continue in their herd versus which ones they were going to maybe move to the DMB pen, and which ones maybe they'd dry off early, and these types of decisions, right? I think a lot of those have been made already, and that's why I think some of these cow slaughter numbers are coming down a bit, simply because there was so much market pressure on producers to really focus on that efficiency throughout this whole year. Now, one thing that is very interesting is milk components. So if you look at milk components over time, they've kind of made this hockey stick up and to the right in values since 2010. So this year, right, as we can see by this graph here, is no exception to that. So in 2023, again, every single month, our milk fat test on the national herd has been increasing, right? So year over year, that is. Of course, we see some seasonality dip in there, as we consistently do. But if you take a look at our recent most fat test for the national herd here, we're at 4.32%. And when talking with some different dairy scientists across the country, many times they'll say, hey, we're just, almost somewhat at the start of seeing what our national herd and our dairy production can be as it relates to components. So, of course, a lot of those factors, feed, we're getting better and better at feeding all the time, but also genetics. So as we see producers responding to some of these market incentives to produce components and the genetics and production practices to catch up, I think we're going to see this increasing trend, right? So on the supply side, what's interesting about that is that our total production of solids, right, is still, even if our milk production stays level, we're still increasing our amount of solids production, right? So while I would say, we're still seeing that pullback in production, and obviously this doesn't make up for all of that pullback in production, but I'd say it's not a perfectly linear comparison just to say, hey, we're fewer pounds in X year, right? And the pounds in 2023 are maybe a little less than that. However, there's a good chance that we're still producing quite a bit more pounds of solids. So one thing to consider in that is that if you take how class 1 and 2 and 3 are priced, and you just kind of back out the formulas, one day I was kind of curious to see where the percent of class prices were attributed to butterfat, and kind of where maybe some of this producer response and pricing would be coming from in order to incentivize this production of solids. And as you can see, kind of the big takeaway from that is that over time, we definitely see this trend in increasing, percent of butterfat attributed to our class pricings. While it's not maybe a perfect correlation, we definitely see this trend as we go along, and producers are definitely responding to that. So on the protein test percent, in November we're at 3.14, and again 2023 we're every single month our test has been above that of the previous year, and 2022 is above 2021 as well. So I'd say all in all we're getting very efficient at what we do, and we're very good at producing milk. So I'd say that hats off to the dairy producer for being able to continue to push the envelope there continuously. So one thing that I thought would be kind of fun to do today is to take a look at where some of our demand things are coming through, and kind of do I put year-end review in quotes on that last slide simply because I know that all of our information and all of our data for 2023 hasn't exactly come through yet, but I figured we'd take a look at where some of our data looks like it might be trending, and where we're maybe some of the winners and losers for dairy product categories as we go along here. What you're seeing on the screen right now is just average annual allocation of milk fat by product, and I just took the last 5 years and averaged them out to say, all right, where does a lot of our solids go? And I think to nobody's surprise, cheese is by far a big winner there, followed by butter, and then fluid, and then your frozen categories, and then some of your other categories as we go on down the list. Now, in a component-based pricing system, right, we have our different class prices, and one thing within those class prices is that we're seeing the gap between class 3 and 4 oftentimes widen more so recently than we had historically. So I just wanted to take a moment to point that out, and to take a look at some of these products that have been potentially contributing to that, because I think it paints a good picture of where maybe some of our price pressures will come from in 2024 as we look at how production and demand for some of these products could potentially be looking. So when we look at class 3 price, once we got to say approximately the middle of 2022, we were the class 3 price, class 4 price were very close, very similar. But then ever since that point, prices have just kind of dropped more or less month over month as we kind of got to 7/1 of 2023, when class 3 price kind of finally found its bottom. Luckily, we've come off of that and then leveled off a bit, but we do see this starting of trend back maybe towards the red a little bit as time has continued. But with that, so has this gap between class 3 and class 4 price happened again. So, with that, part of that obviously is the solids price, because that's what plays into those. And this, as you look and graph out your protein price and your butterfat price, they look very closely related, obviously, to those class 3 and 4 prices. So now when we do look at class 3 price, what makes that up is your cheese and your dry whey. So I figured we'd take a look at some of the kind of main economic signals that we're seeing for that class price here. So when we take a look at total cheese production, what's very interesting is that for 2023, we've held very close in production month over month to where we were in 2022. What that tells me is that, we're really optimizing our cheese production, right? We did slip a little bit in June, July, but if you do recall from previous slides, so did our production a little bit. So it looks like maybe when our production came down a little bit more in those months, that's where some of that response is being seen. But all in all, it looks like cheese factories are running at capacity, which wouldn't surprise anybody in the industry, especially considering a lot of the news and information that had been out or talked about in 2022 about finding a home for milk. So I don't think that comes as a big surprise to anybody as 2023 comes to an end here. One thing to keep in mind, though, is that right now we're looking at a decent bit of production, dairy processing coming online through 2024, 2025, and a bit into 2026 as well. So as we're looking at getting all of this new investment in dairy processing, it looks like a fair bit of that is going to be in cheese production. So if that's the case, then that means that we would see this total cheese being produced obviously increase. But with that, if we're already seeing maybe some class 3 price pressure, I think it's reasonable to assume that as more product comes on the market, that pressure would potentially increase as well. So if we take a look at where cold storage is for 2023, all in all, I wouldn't say that we're, 2022, we did have some pretty big inventory increase. 2023, I'd say more or less we're running on trend with 2022. We're slightly above at the moment, which I wouldn't say lends itself to being exactly great news as far as that class 3 price, because if we do get long in inventory, I don't think there's many cheese buyers clamoring and searching for product at the moment. I think there's ample inventory out there for the buyers that are looking. One thing to take a look at is our exports in cheese. Right now at the moment, if you look at it, it looks like we're kind of in that range. However, based on where we were last year, especially when we had some pretty solid prices, our cheese exports are a bit weaker than they had been previously. So when we think about the demand side, I definitely keep that in kind of the back pocket of things to look at. And how much product we're moving outside of the US borders, I think will definitely have an impact on our prices, as I think we do have some work to do on catching up in that department. So one good story about 2023 is that our total domestic disappearance of cheese here, as we look at it month over month, as we got towards the end of the year, has been increasing, especially in these last few months. Part of that, of course, is the holidays. We always see kind of the uptick there. But this year, I'd say for the holiday season, what's particularly nice to see about these recent numbers coming up is that there's been a lot of inflationary pressure on the consumer as they go to the grocery shelves. So if we can still keep moving enough cheese, through the supply chain and off the grocery shelves, I think that's going to be painting a good picture for especially those producers that are selling into a class 3 market. One thing that we're definitely keeping an eye on is seeing if consumers are trading down in their product choice for products like cheese, right? If they're going from a specialty cheese to maybe more of a name brand, American type cheese, something like this, because then that kind of gives a signal of how much price pressure a lot of people are receiving as they go to the grocery shelves and look to make those choices. So if we take a look at where cheese production has changed in 2023, across most regions of the US, it's been quite flat. We did see a little bit of an uptick in the Atlantic, a little bit of decrease in central US and western US. But I would say that, and a little bit of uptick in California, but more or less, not a lot of change. But I think it'll be very interesting to see as we get into 2024 here, where a lot of this cheese production is going to change and take place and how that'll influence some of the markets. So to kind of round out the class 3 discussion here is total whey. Our whey production did very well in 2023. One interesting thing that's not on this slide, but that if you take a look at the graph, the NDPSR, the National Dairy Product Sales Report over 2023, is that whey did tell a good story in that there was some price responsiveness in the international market to it. So it was good, even though it was, sold at what you may consider a discounted price compared to what it was previously. It was nice to see that as prices came down, buyers did show up. So that price responsiveness was not consistent across all NDPSR categories, or as apparent as it was in some of these other markets. So that was very good to see. And that also means that, hopefully there's some buyers out there that if prices do tend to soften, that they're, looking for that bargain, they're looking for that buy, and that'll hopefully at least create somewhat of a price floor, if you will, for some of these products and these prices. So at the moment, our stocks are, we have been burning through some of that inventory, which is great. We had been a bit long for most of the year. But I think we're well within a normal range at the moment. But kind of the big story to talk about on whey is on that consumption side. When we take a look at our total whey exports, we're definitely below where we were the last 2 years. And like I said, even though there was some price responsiveness there, in this bottom left graph, you can see when that happened in that July time period, we got those kind of, dare I say, brutally low prices. And buyers did step up and say, hey, that's a pretty decent discount and we're interested in some product. And then when that happens, it showed through the numbers here as we kind of rounded out the rest of the year. So that was nice to see. We did get a big, decent uptick on our domestic disappearance in whey too. So that's always good when we can use it within our borders. That is, decreases some of the international competition for logistics and price pressures. So if we can continue that trend, that'll be very nice to see as we enter 2024. When we take a look at class 4 prices, of course, the constituents of that are going to be butter and our non-fat dry milk. So when we take a look at butter, our production had been solid all year long here. We did enter some of that seasonal time period as we normally do, and now we're coming back online with some increased butter production. On our cold storage, I'd say we're more or less in line with where we had been, and not nothing out of the ordinary on that. But again, kind of the one that stands out here is this exports. We've been lower on butter exports, but the good news is that some of our domestic disappearance has kind of offset a little bit of that. And butter has been a great story as far as price goes, in order to kind of hold up and prop up some of these milk prices. So as we take a look at total butter production year over year, in 2023, it currently looks like, based on the numbers that are in and comparing that across the same time periods for these years, that we are going to see a slight uptick in total butter production. And even with that increased production, we still did see, some good prices. So I'd say that was a good silver lining here for the industry. And now if we take a look at our dry skim products, this is kind of all of them in total. 2023, our production definitely decreased. Our ending stocks, I'd say, are more or less in range with where they were. But again, our exports are down from where we'd probably like to see them, and so is our domestic disappearance. So I'd say the big takeaway from that is that right now butter looks to be the one carrying a lot of the prices there. So as we look at where some of our production changes are happening, I don't think this is any real surprise to those that are in that manufacturing space, but we saw the coasts, right, kind of decrease in some of these dry products, California and the West, right? So as we see that, they definitely have the logistical advantage when they take a look at exporting some of these products. So if they're going to be lower, that in production, that's where we would expect to see a lot of that. If we take a look at some of where the winners and losers were for products, individual dairy products, I thought it was very interesting that cottage cheese did so well this year. If we look at just the percent change, low-fat cottage cheese domestically was up 11.38%, creamed cottage cheese 9.6%, and cottage cheese is a product category almost 9.5% increase. So I thought that was very interesting. That was really great for that product category, and it's nice to see that people are reaching for these products when they go to the grocery shelves. That's for sure. One interesting thing on the yogurt front is that the plain yogurts, plain and flavored, the regular, you'd say traditional yogurt, did have a 3% increase this year, but frozen yogurt was down 13%. I found that very interesting. So, it looks like there's some changes in preferences in the consumer side, and I think you see some of those changes in preferences in ice cream for sure. Regular ice cream as a product category was down 3.5% approximately, but our low-fat ice cream was down 10.5%, but our non-fat ice cream was up almost 26%. So what's very interesting is that we're kind of seeing, and you see this in some headlines of folks saying that fat is in vogue. And it seems like producers are kind of going one direction or the other in their preferences, right? So when they're looking at dairy products, they're either going, like you see for the ice cream here, going non-fat, right, versus low-fat, or they're going towards higher fat product, right? So it's kind of like the middle selection or the compromise between the two, if you will, hasn't really won out. It seems like producers are selecting one or the other. So I just kind of find that interesting as we're kind of seeing some of these shifts in the marketplace of consumers. So, and where did a lot of this ice cream production change? California had an increase. Some of the other states that are not listed as our main producers had a nice increase. The Atlantic, Central, and West as well. So, as we said before, kind of looking at demand, we did mention some of our domestic demand here a little bit and what that looked like. So I think we'll kind of take a zoom out a little bit and look at where our exports are and kind of where our world view is on the dairy market. So this is just kind of a recap of what we had before, right? So total cheese exports, more or less in line. But again, all in all, it definitely is going to come in less than where we were in 2022. When we look at total whey exports, 2023 is certainly down quite a bit. Butter exports, same story. Dry skim, all those products, again, very much the same story. So as we take a look at where we find a home for a lot of our product, this is the top 10 export markets for our products over the last 5 years. Mexico makes up about 25% of that. Canada, approximately a number 12. And China is about 8.6. And if you take all of the Asian market together, it's over a third of where all of our product goes. So with that, I know a lot of people, there's always a lot of discussion about China, and rightfully so, right? So as there is increasing uncertainty in China at the moment in where their buying is at, I think that there's a lot of possibility that their buying is not going to be as strong as what we'd seen before. As we made it through like the first half of 2022, there was often chatter in the international markets that China had ample inventories and that they had caught up from some of their COVID buying, right? So during that period of time, they realized that if they're going to get product in a timely manner, that they need to order it, well ahead of time. And they did so, and we saw this kind of spike in purchases. And then as that kind of worked its way through the system, especially in early 2022, they were kind of sitting with enough product on their shelves. So while they had inventory on hand, they also had some of these additional demand and inflation factors happen that didn't clear product as fast as what some would assume. So that means that a lot of our buyers there seem to be maybe not as aggressive as what some of the U.S. folks would hope in some of their purchases lately. So 2024, I think it'll be interesting to see where some of that demand comes back and how strong they come back as a buyer. Now, this graph is what we have here is just kind of taking a look at global milk supply from the key exporting countries of dairy products. So I realize that 2023 is only updated to September. However, I do think that this does a very good job of kind of showing this seasonality, where as we get into November, December of the year, right, we kind of see this tailing off of the major kind of second bump through the year in supply, right? And as we look towards January and February, as I don't think comes to the surprise as anybody, we are looking at this ramping up again in seasonality of some of the daily supply here of milk. So with that in mind, I think that's an additional factor that does provide some price pressure on the U.S., right? So as we take a look at global milk prices, the U.S. as we did look, in 2023 when our prices were very low, our milk was at a discount to the rest of the world. And if we're going to be exporting, I think, naturally that has to be the case, because we do come at a logistical disadvantage to a lot of these other milk producing regions of the world. So, our milk price and our products do have to account for that. We have seen our price come back up over the world price here. Which when you take a look at the export side, is going to have some price pressure there. So if we kind of take a look at where the change in milk production and the change in exports in milk equivalents have happened, you can see that the US were down about 500,000 tons, something like this, right? Where our exports have decreased. But if you take a look at EU and New Zealand, their exports have increased by quite a bit more than what ours has decreased, right? So it means that they're serving a lot of those international markets that we're not. So, and then even while that's happening, their production is increasing, as well as the US, over this January to October time period that they have listed here. So I like to include this graph that's just the global supply variation in key exporting countries, simply because I think it does a very good job of showing how prices in 2022 were supported by the export market, simply because we see that as we got into 2022 and then through the first half of 2022, there was quite a bit of decrease in production from some of these key exporting countries. And then as we ended 2022, a lot of our production had increased in these key exporting countries, right? And now as we get into 2023, we saw that it's kind of waning a bit again. However, I would say nowhere near to the extent that it had that gave us those price supports and price increases in 2022. So while that may be a bit of good news, I do think that a lot of that production is going to come back online very soon, and we're not going to see this continued trend downward in production that we did in previous years. And part of that for 2022 that fared so well for us is that a lot of the product availability, simply because of decrease in production, wasn't the same in other countries, right? So when they didn't have the product availability here in the US, we could raise our hand and say, hey, we have product, we're more than willing to sell it, and and that really supported our prices here in the US. So I don't see that this trend looks like it may be somewhat coming, but I think it's going to be nowhere near what it was in previous years. And I think a lot of that also kind of shows in our export numbers so far, that the rest of the world just isn't clamoring for product like it was previously. So what does this kind of mean on the farm level? As we take a look at some of the research that was done on campus by Chuck Nicholson as well as Kevin Bernhardt, we kind of take a look at some of these dairy farm cost of production numbers. So they've updated this in the slide that I'm showing right here. It goes up to 2018, and they're putting out some information that updates this to more recent years. But really the theory and the findings pretty much stay in line, and that is that as you take a look at the cost of production across dairy farms, and this includes different sizes, types, all these different variables and considerations, we often see almost a $10 spread in cost of production across dairy farms. So what that means is that where one farm, they could have, say, $16, $18, $20 cost of production, you could easily be $5 above or below that right down the road, right? Simply because of the different situations, decisions, management, things like this on each individual operation. So with that, while we say some years are good and some years are bad, some years for some operations may be good and some years for some operations may be bad, right? But I do think that 2023 had been a challenge for the vast majority of producers. 2024 so far, it looks like we do see a lot of pressures coming along, and hopefully it's not as bad, but I think we're going to have to see a lot change on the demand side in order for this story to paint a good picture in the other direction. And one thing that's very interesting is, especially on the farm level, as we come off of a year where prices had been good in 2022, that means that producers may have some cash in their pocket, something in their checking account, right? And as we went through 2023, what we saw was a decrease in what they call non-real estate farm loans, or operating loans, if you will, right? And that's the big question, is if producers are going to be in a cash crunch as we get towards spring here, or if there's still ample working capital in order to be able to take care of some of these purchases and operating and input cost, right? So, and of course, the big reason for that is interest rates. So if we're looking at operating loans of around 8% and or above, as shown by the Kansas City here, it definitely changes the math, and is especially for operations that kind of depend on a larger operating note, some of that opportunity cost in doing so is definitely going to be noticed. So if we are burning through cash and working capital, which it wouldn't be a surprise given how difficult 2023 was, it might prove to be somewhat of a difficult start and increase in operating expense as we look towards 2024. And speaking of operating costs, when we took a look at where some of our interest cost is per hundredweight across different farm sizes, if you take and just average them out across every single farm size, for 2022, the average interest expense was about 86 cents. So I like to bring this up a lot simply because when we're taking a look at any sort of borrowing, operating or otherwise, or looking at investments or changes, I think as our interest rates are certainly higher than they were before, that does come with a bigger opportunity cost than what we have seen in the past, right? If our average total interest expense is at 86 cents a hundredweight, and that's in 2022, if we do look at making any sort of investment decision or increasing that, right, we can easily, for some operations, get well over $1 just in interest. This is not P&I, it's just interest. As you start to break down your cost of production by hundredweight, increasing that is certainly potentially noticeable on some operations as they go forward. Now, I don't think this comes as any surprise, but I wanted to show some price volatility here that we've experienced over 2023. When we take a look at, this is just spot price volatility, not CME. So if we take a look at spot price volatility, it's been increasing ever since 2022 across all three of these product categories of 40-pound blocks, barrel cheese, as well as the dry whey market. So I think as we go through the rest of, all of 2024 here, it would be, I think it's a difficult story to say that this spot price volatility is going to change. So it's, kind of a double-edged sword, right? It does make it more difficult to manage. However, if you are looking to take a risk management position, as some say, volatility does give opportunity. So there may be, as we do see this increase in price volatility, some potentials in order to take some risk management positions if the market does offer you something that does have a spike or a bump or something like this that might be something favorable for your operation. So I'd say that's definitely something to consider and watch out for as we go through the first half of 2024. So the big question is, where do you think we're going to end? So, and where will prices be? The short answer is nobody really knows, but I think that we're going to see, kind of this range bound, more or less treading water as far as prices go. Right now, CME, there is not a huge amount of forward curve in class 4 price. We're about that 1950 average. Now, if we take a look at where our class 3 prices are, we do have somewhat of a forward curve, but now through August, we're at $17 milk. So, and I think it would be hard to say that this gap between those two prices is going to decrease, or they're going to perfectly align in anytime soon, simply because those product categories seem to be operating as their own independent markets and maybe not quite as linked as what we had seen historically. So if that is the case, I think that as producers are selling into a class 3 or class 4 market, I think could definitely see the difference on their milk check for sure. This is the actual and forecasted dairy margin. This is based off of the DMC Dairy Margin Coverage Program. What you see is this in the yellow section is the historic middle third of margin values. So, and that represents, that 950 level. And, we just came off of this last month where we were just above 950 and no payment was made. I do think it is quite reasonable I wouldn't say expect, but I wouldn't be surprised at all if payments do come in the next, first few months of the year, especially as we enter this period of lower historic prices in the first few months, January, February, and then we hit that spring flush period. I do think that where this is mapping out does forecast what we might be expecting for quite some time. Hopefully that the tail end of this, as we get past July, we do see this uptick and this increase in margin. At the moment, we do see this, August, September of being around a 10.50 margin per hundredweight. I don't know if I would hold my breath for that just yet. I think there's a lot of things in the market that I'd probably want to see play out before I would rush out and bank on that. So right now, I'd say all in all, I think our milk is just kind of treading water at the moment as far as prices go, and just kind of waiting to see what happens. So waiting to see if there's enough domestic side demand increase, enough international side demand increase that's really going to move a lot of this product in order to support those prices. The other big part of that is, what does supply look like as we enter this first quarter of the year? If our cow numbers don't increase too much, hopefully that supply pressure won't pull down prices too much here. But also on that class 3 side, I think that's really going to be the thing to watch as new production comes online. So all in all, I do think it is going to be somewhat of a tight year. I wouldn't expect at the moment that milk prices have a huge amount of upside to jump into. I just think there's a lot of this middle ground, a lot of pressures that are happening at the moment that are going to be kind of dictating the day as to what's going to happen. So if you are interested, we do put out information, try to put out something every week that you can take a look and see here, whether that's information on some of the policies and things that are happening, federal milk marketing orders, dairy margin coverage, things like this. Feel free to take a look. Before we do take some questions, quick note on dairy margin coverage. We're still waiting to hear what the sign up period is going to be, and all information on that. So as soon as something is defined and put out, I'm sure that there'll be a lot of outlets to be able to find that information and be able to make those election decisions for your operation. So with that, I do want to thank you very much for allowing me to share with you today. Look forward to your questions. Again, thank you for having me. Thank you to Hordes as well as the sponsor for today's session.
Thank you very much, Leonard, for sharing your insight and predictions for the dairy industry in 2024. There's certainly many moving parts that factor into these forecasts, and we appreciate you using your knowledge and your resources to speculate what might be to come down the dairy pipeline. This webinar will be posted on our website later this week, so if you'd like to rewatch it or share it with someone else, you can find that at hordes.com under our webinar tab. If you have any questions for Leonard, please type those into the question section of the GoToWebinar control panel, and we will address those in just a moment. I want to introduce you to our upcoming webinars. Our webinars take place the second Monday of the month, and we have our program for February, which will focus on lung ultrasound. So that will be presented by Dr. Terry Olivet from the University of Wisconsin-Madison School of Veterinary Medicine. She'll be talking about using lung ultrasound as a management tool in young dairy cattle. And then in March, we will have Bill Weiss, Professor Emeritus from The Ohio State University, talking to us about feed sampling and the analysis that follows. So if either of those topics interest you, we hope you will make plans to attend. We will address a few questions that have come in. One of them did ask about the DMC signup, so thank you for addressing that. I know a lot of people are waiting for that information to be released so they can make plans for the year ahead. A question for you here. What is the expectation for the pregnant heifer market in the year ahead?
That's a great question. What I've been seeing and hearing is that there's a lot of expectation for that to remain fairly solid as far as prices go. Whenever I hear sale barn information in my neck of the woods, heifers are selling well. Prices for cows are high, especially considering where milk prices are at. And I appreciate that question, because I do think there's always that question of, well, if my milk prices aren't exactly stellar, how are prices of replacements staying so strong? And it does seem like there are some inventory pressures there. And I think maybe part of that is as our milk prices have been soft, but beef prices have been doing well simply because of the national beef herd. A lot of the terminal breeding, things like that, potentially have taken out some young stock. But yeah, I see exactly where you're coming from in that question, certainly. And I do think that those, it looks to me at this point in time from the information that I've seen, that they're probably going to continue to stay strong for a bit yet.
Now we have someone looking for a little bit of clarification on slide 39, the cost of production. Was that just Wisconsin farms, or did that data come from a wider?
Great question. That set was just Wisconsin farms. Yep.
Do you have any thoughts or predictions on the organic market, both maybe the demand and prices for milk?
I don't. I'll read about some of the updates and things like this that come out. Honestly, they're where a lot of the information that we shared today is kind of based on the commodity market model, right? And as organics, they're differentiated products. So while there may be some overlap or correlation, the aim or the goal is to maybe step outside of the pure commodity type of product and pricing, right? So I do think that there's some discussion or conversation around where the growth in that product in that space is. So I would think that's kind of interesting to see, but I don't have any what I would say is solid predictions or good information to share on that front. But I do appreciate the question.
This question is more focused on exports, and Canada is obviously a good sized trading partner of ours. Do you feel there's more room for growth there if we work through some of the trade agreement aspects that we've been kind of dealing with the last year or two, or do you feel like there are other trading opportunities that are will be more important or more influential moving forward?
It almost seems like the ball is in Canada's court at the moment on that one. Just kind of seeing how much they are willing to take, right? So if the more they're, from the U.S. perspective, we're more than willing, right? So and we have product to be able to share with them. So I think a lot of it just kind of depends on where some of these agreements pan out and what sort of resolutions they can come to. And what Canada is really looking for and needs as far as product on their end goes. There's been some news and some information released on organizations, groups, government spending on increasing some export markets that started in the latter portion of 2023 here. So as we go to 2024, it'll be very interesting to see if some of these what impact these programs have and how much traction we can gain in the international market in order to find a home for some of our products with some of our buyers that maybe hadn't purchased as much volume historically. So I know there's a lot of focus and effort on that, trying to get either more products, more buyers to look at different things, all of these things. So I think it'll be interesting to see where 2024 plays out and how what traction some of these new initiatives can gain for sure.
Do you predict a lot of growth on the dairy processing side in the next year or two?
I think there's going to be quite a bit of growth simply based on what's been announced by new investment in processing. The last number that I heard was a guess of about 2% increase in cheese production. And I think that might be a bit on the light side. And of course, where Walmart had announced in the Southeast their fluid facility, and I didn't include it here, but I do believe EverAg does have a good slide or a good picture up of where some of the different processing is expected to be implemented across the U.S. in the next 2 to 3 years. And there has been quite a bit of investment in that space. So as we do, it'll be very interesting to see how much of that new processing and investment absorbs the fluids or the milk production supply, right? And then how much of that, if it's taken from the open market, right? Or how much of that potential supply has already been accounted for and allocated. I think that will be very interesting to see as we go to 2024, and that'll have very, I'd say, definite impacts on where prices fall, just kind of based on where some of that product is being cleared from.
This one is going back toward the beginning of the presentation, and if you could maybe touch on why non-fat milk powder production has been decreasing, particularly the last couple of years.
I don't have a great answer for that. So this is just total dry skim. So I included all the dry products in one and added them up. It seemed like it was easier than doing each individual. Honestly, I don't have a great answer as to why. I would just assume that on the processor side, if there's not a great market for it, that they're going to try to rein that back, right? So I don't have any resoundingly insightful answers as to that, but I do appreciate the question, that's for sure. But I would say, if our exports are down and if our stocks still seem to be in range, as the processor side, not a lot of reason or incentive to keep producing if there's not a great demand for that product and there seems to be, product for the buyers.
What are your thoughts on the milk alternatives and the impact that they have on the dairy prices?
Well, there's some research that's just starting on that by a few economists. So it'll be interesting to see kind of what some of that updated stuff comes out as. One interesting thing is that when you kind of look at attributes for dairy, for any kind of food product, right, whether that's pork, chicken, dairy, what have you, that when you look at increasing an attribute such as cage-free or organic or so on and so forth, that there is what you would call an income effect associated with that, meaning that as incomes rise, the willingness to pay for an attribute increases with it, right? So I think there's definitely some income effect in place in a lot of those products, especially if there's no dietary requirement, right? So I do think that if some of these inflation pressures do continue, and that some of the as people go to the grocery store and have to allocate their grocery budget accordingly, if those price pressures do change, that maybe reaching for a gallon of milk, especially depending on where income levels fall in relation to willingness to pay for these different attributes or products, there might be some pressure there and trading to reaching for a dairy product instead, right? As far as its, I'd say significant impact on pricing, I don't think that it is like the one thing that is keeping prices low, right? I think it would certainly contribute, right? But when you do take a look at total sales volume of just fluid milk versus total sales volume of these alternative beverages, I mean, milk still is far and above where the total sales volume is for these other beverages. I wouldn't say it's a concern. I think it's definitely something to watch. But I think that milk still has its place on the shelf, and people are still drinking milk, even though the trend line on that has been going down. What's interesting, I didn't share it here today, is that in the U.S. on average right now, the U.S. consumer consumes about 3.65 glasses, 8-ounce glasses of milk per day in milk equivalents, right? So milk equivalents means if you take every product and turn it back into the fluid equivalent of it, right? That's what it would equate to. And that number has been increasing over time. But if you take a look at the fluid milk graph, right, that has been decreasing as per capita consumption. So that means that they're getting their products, they're getting their dairy in a different way, right? So, and a lot of that has been through the growth in cheese. While I wouldn't say that, oh, it's fine, right, that people are getting their dairy and cheese and not fluid, like I guess I wouldn't wave my hand and say, oh, it's all right because of that. But I would say people aren't turning away from dairy as a category entirely, right? They still want the product, they still want milk, but maybe in just different forms and things like this. One thing that is very, I will say, interesting is that when you do look at some of the consumer spending habits that were trending for the holiday season, that a lot of the demographics that a lot of those products are targeted towards, the alternative milk beverage products, that demographic was showing a decrease or a pullback in their spending across all grocery categories. So if that's the case, and if the current economic environment is is affecting that demographic, right, which is generally we'll say younger half of the population. A lot of times, they're in the stage of life where they have families and things like this. That if they are changing their spending habits at the grocery store, it will be interesting to see if that does come through in the information and sales data kind of as we proceed, and as some of these inflation and interest rate factors remain higher than we've seen in more recent history.
We know there are many factors that are influencing the rise in component production from today's dairy cows. Have you been tracking at all the impact that changing cattle breeds and the overall national herd makeup of what breeds are on dairy farms today, how that is impacting component production?
So I have seen that information. Honestly, I do not recall specifics. There was someone that just put out some information that there anecdotally does seem to be, especially more recently here, an uptick in demand for the colored breeds. They were talking, specifically about jerseys, but I haven't looked at that recently enough to be able to provide any good insights. But I do think that's a relevant question and consideration for sure.
Very good. And we have just one more question here, and a compliment also, commending you for a wonderful, wonderful presentation and a great market update. So I would echo those comments too. What products do you perceive for 2024 as kind of the, the products, if you were going to be a processor, what would you want to invest in, or what are maybe our best dairy bets for 2024?
So there is a lot of processing allocated for cheese production. There's no doubt about that. And Walmart's facility of fluid milk in the range of like, don't quote me on this, but like 55 million seems to be the number that comes to mind at the moment. And again, I might be wrong on that, so my apologies. But one thing I think is very interesting is, I'm going to see if I can find it here quick, but that two product spaces that I never expected to come on the radar is this cottage cheese, one, and then two, ice cream. I think ice cream is going to be very interesting to follow. There seems to be a lot of news and energy around that product category right now. I know that, as a percent of total milk allocation, it's not necessarily large, right? Like cheese is certainly more. But I do think, I guess it wouldn't surprise me if we can kind of continue to see some uptick in this ice cream category and some recent new products to come to market in that space. So while I do think, ice cream and cottage cheese are not the leaders in, like I said, in total percentage or anything like this, but I do think they might be very interesting products to watch in 2024, simply to see if the words that come to mind are if the old become new again, right? Like I can remember as a child, like cottage cheese was just kind of a normal thing that if you had a packed lunch, that it was part of that. And just from my experience, it seems like that's maybe trended away and then maybe coming back again. So if that is the case, and they have some different options and product innovations and such, that maybe consumers will be reaching for that again.
Thank you once again to Leonard Polzin from the University of Wisconsin-Madison for his presentation and for answering this group of questions. I'd also like to thank our sponsor, QLF, Quality Liquid Feeds, for their support of this program. We really appreciate that. And of course, I would like to thank all of our listeners who are out there paying attention to our presentation today. We really appreciate you making time to join us for this program at the start of the new year. And we hope that you'll make plans to attend one of our future webinars. Happy New Year to each and every one of you. And until next time, goodbye from our team here at Hoard's Dairyman.